Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some more of the small caps that were in play today. And so first up, let's take a look at PYX. So yeah, it's cruising here, this consumer staples tobacco stock. They had a Snapple executive team up with PYX. So yeah, there's a lot of talk about this company right now, and it's breaking out higher. So yeah, right now we have RSI up here at 74. So you can see here it's at the overbought level. It's going to need to stay above 74 now that it's broken above. Okay, now you've got a big push today, well above that upper Bollinger Band. And so if the candles work back into the bands, you want to see this EMA4 at 31.14 hold. Notice the push well above the upper Bollinger Band, which is down here at 32.97. Today there was a bullish move above this resistance from March, April, and May. You could see this bottom green line was the high close resistance level to break, and so the close above that level today is signaling more upside potential. There was a gap up open today, so now there's an unfilled gap between high of day on Friday and low of day today. A drop down here to just above 29 would fill that gap. Notice the giant volume spike behind the move today. Many times when you get a push well above the upper Bollinger Band, the candles will work back into the bands. Now, if you look here at PYX on the monthly chart, you can see it's hitting that 70 level. That's the overbought level. It's going to have to stay above 70 now that it's hitting that zone. Okay, now we've got the Fasto at 97, so this is a level it's topped out at it in the past. It has a hard time staying above 80 on the monthly chart, as you can see here. Every time it gets near this level or above it, it's pulled back within the last, going all the way back to 2008. So yeah, it's getting near the top here historically for this stock. It could temporarily top out here at the 200-month moving average, which is at $40 basically. And so if it can break above 40 and close above that level for the month, that's going to signal more upside potential. Keep in mind, this month's candle will not set until the closing bell on the last trading day of the month. So it's all about closing above. If it stalls out here at this 200-day simple moving average, you can see this is big resistance from back here in 2012 and 2013, right here around 39, 38, 50, 39. Then the candles could work back into the bands. You can see the upper Bollinger Band's down here at 30. The downside risk is it pulls back the EMA4 at 27, or possibly tests that 100-week moving or 100-month moving average. It's the gold line there. It's breaking out above that level this month. It hasn't been tested. It was trading below. Notice how it was resistance when it was tested before. So a monthly close above the 100-month moving average is very bullish. It just may need to be tested, similar to how the 50-month moving average was tested and it pulled back before it breaks out higher. We'll just have to see. It's going to be all about breaking 40. So if it does break above 40, the next big level is 44. That was the high close from back here in what was this, October of 2010, and then above that would be up here at 51. Okay, 51 was a big resistance level from back in 2010, and so that's going to be the upward target if it can break above 40. Check out the big volume behind the move. Keep in mind, if it fails to break above 40, the candles will likely work back into the bands. Okay, keep your eye on CARA, ticker symbol CARA. It's been pulling back here. Notice that Fasto's down here at 8.69. It bounced when Fasto got to this level down here and back in June, and then it did stay below 20 for an extended period of time on that pullback back here in July and August. So right now it's hitting the key support level. It's hitting this green line. The green line is the 50-day simple moving average. Notice how when it hits this zone, it tends to bounce, and so that's the setup right now, is a technical bounce off of the green line. It's also hitting the lower Bollinger Band at 1981, so that this $20 support zone is a huge level to bounce off. If it can hold this $20 level, look for a break above the EMA4 at 21 here to signal more upside potential. As long as candles are forming below EMA4, you can see support broke right here on the first trading day in October. It signals the bears are in control. Once it closes above, that's when it can get a bounce going. Now, if this 50-day simple moving average turns into resistance, since it did close below that level today, the next target below would be the 100-day simple moving average at 1889. Okay, let's look at AMTX. I'm going to finish up with a couple of materials, specialty chemical stocks here. These stocks in this sector like to run at the same time. A lot of times that when one gets moving, they'll run the other ones. And so right now, AMTX is the one making the bullish move here. closed up 35%. RSI at 62, it still has room to run, but until that 70 overbought level. You can see the bull cross here. The green line crossed over the red and the black line to the upside. Now the plus DI, the green line, needs to stay above the black line, ADX. Okay, so today there was a bullish close above multiple moving averages. Okay, so yeah, it started the day. It started, Friday. It closed down here at $1 and was able to break above EMA's 4, 8, and 13, the middle Bollinger Band, which is the 20-day simple moving average, the 300, the 50, and the 200 simple moving averages. All these moving averages broke with the close above. Right now, the key level to stay above is this 200-day simple moving average at 126. If it dropped below, it could pull back and consolidate and test the lower moving averages. It really needs to hold that level now that it closed above. The key level to break is the 100-day simple moving average at 137. That's the top moving average on this daily chart. It broke above that level intraday, but it pulled back below. If it can close above, that's going to signal more upside potential. Then you have the 150 resistance zone, and then up here right around 175, which was the July 9th closing price. That's going to be the upward target if it can close above the 100-day simple moving average and turn it into support. So yeah, keep an eye on AMTX. It had the bullish volume spike down here, and then it is hitting resistance here from August, the high close resistance level. If it can bust through this 137 level, that would be very bullish. It needs to close above. Okay, so check out GEVO. This is another specialty chemicals material sector stock. It's heating up as well. You've got RSI at 58, Fasto up here at 80, and so the chart's heating up. You have a bullish crossover here on ADX. Check out how the green line crossed over the red line for the first time since back here. That was the last time it made a little rally. It did make a little run right here too, but the big move today was the close back above that middle Bollinger Band, which has been the key level to turn into support. That's currently at 415. It needs to stay above that level. Notice the ascending support line, and so it's been it has this ascending triangle type of pattern, and the horizontal resistance in this pattern is the closing price on September 11th. Notice how that's lining up with the gold line. That's the 100-day simple moving average at 470. So if it can close above both those levels, that should be the signal it wants to head higher, and then we'll be looking for a run up to this red line. The red line is the bottom of a gap. There's a gap over here back in June between low of day on this candle and high of day on this candle. Keep in mind the bottom of the gap is always tough to break. If it comes up there and hits that level and fails to break, that'll be a temporary top. If it busts through, a run up here to the second red line would be a gap fill. Anytime you turn that 100-day simple moving average into support after trading below, we look for a potential run back up to that 200-day simple moving average, similar to back here. And that's currently at 713. Now, if the middle Bollinger Band failed to hold and it dropped below the 50-day simple moving average at 390, that's the green line right here, that would be a sell signal. It needs to stay above that level to get pushing higher. Keep in mind, it's back in the very tight sideways channel, and so it's going to have to bust out of this channel to head higher. I mean, notice all the candles for weeks have been in this very tight trading range. It's only going to be a good play if it's trading above 470. All right, so keep an eye on GEVO tomorrow. Okay, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.